Written outward journal is used to record goods or inventory returned back to supplier or account payable. The source document is a credit note sent by the supplier or account payable. These are examples for written outward. On April 19, good worth 10 ringgit returned to Ali, credit note number 001. April 25, good worth 50 ringgit returned to Rama, credit note number 321. For written outward journal, the title will be the first, and then followed by the date, detail, credit note number, the folio and the amount. The date for good returned to Ali is 19 April 19. The credit note number is 001 and then the amount is 10 ringgit. And then good returned to Rama is at April 25. Credit note number is 321 and the amount is 15 ringgit. Total return outward is 25 ringgit and will be transferred to return outward account in General Ledger 7 on April 30. The ledger would be as follows. For return outward account, since return outward will reduce the amount of purchases or purchase expenses, reduced in purchase expenses will be credited. So 25 ringgit is in the credit side of return outward account. And for account payable Ali and Rama, the amount of return outward will be debited because liability will decrease with the return outward. In account payable Ali, debit 10 ringgit. And then for account payable Rama, debit 15 ringgit. Next is return inward journal. This journal is to record goods or inventory returned back by customer or account receivable to the business. And the source document is a credit note issued to the customer or account receivable. These two examples for return inwards. April 16, good worth 20 ringgit returned by Lim, credit note number 111. On April 22, goods worth 30 ringgit returned by Min, credit note number 121. So you need to prepare return inward journal. The date for return of good by Lim is 16 April, and then good return by Min is April 22. The credit note number for goods returned by Lim is 111, and the credit note number for good return by Min is 121. The amount for good return by Lim is 20 ringgit, and then for Min is 30 ringgit. Total return inwards is 50 ringgit and will be transferred to return inward account in General Ledger 8 on April 30. Return inward account will be debited because when sales revenue decrease, the amount will be recorded in debit side. Whereas for account receivable Lim and Min, the amount of return inward will be recorded in credit side of account receivable because return inward will reduce the amount of asset. So reduce asset decrease will be credited. So 20 ringgit for return inward from Lim, and then 30 ringgit is a return inward from Min.